What's going on, YouTube? It's Matt Faircloth. Welcome to the Mentorship Monday program. As I said, my name is Matt. My company is the DeRosa Group, and this is Mentorship Monday. I'm going to want to bring in my partner, Justin Fraser, to talk us all about insiders. Justin, how are you today?
I'm glad to be back. You held down the fort without me last week.
I got this.
I watched. Right. I did watch.
It wasn't the same without you, man.
I know. Well, a few weeks ago, you were traveling, then I was traveling. Now we're back.
Tis the season, Yes. Tis the season. Welcome, Justin. Get to it, man. Justin, who we got today?
Yeah, today we have Jonathan Santiago. Jonathan, come on in, man. Hey, man, what's going on?
What's up, Jonathan?
Good afternoon, guys. Good afternoon.
How's it going, man?
I hear you loud and clear. How's your day going, man? How's Monday?
It's going pretty good. Right now, just looking for the next deal as usual.
We got you.
I'm in the process of actually selling one deal to be able to start the real estate business full time. So.
Oh, cool. Okay. Yeah. Okay. Well, let's get to your question, man. I want to help you out here. So how can we we'll put your question up on the screen. But you don't have to read it. Just paraphrase it and give it to me in your own words, man. What's your question today?
So as I mentioned, I'm someone right now who's looking to get into the real estate full time, and I may potentially have friends and some people who are interested in investing with me. So I'm trying to figure out what is the best way to structure deals for someone who's looking to get either some equity in the deal, or if I am doing a BRRRR deal and they want to have some in on the cash flow, how can I structure it so that, they get what they want, but I also benefit as well, since I'm going to be doing most, if not all of the work, and they're just doing the capital.
Is it your hope that they put up all the capital?
I'm assuming with the first couple of deals, it's going to be a combination of private money and hard money. So they'd be probably putting up a lot of the purchase price, maybe, or like 20% of the purchase price things. That's what I have in mind right now. But to be honest, I mean, as of right now, I don't think they'd be putting up 100% of the capital.
Got it. Do you want to stay in with these people long term? Like, are these like if is there like a bunch of people, or is it one or two people that we're talking about here?
It would be at least anywhere from 2 to 3 people initially. Maybe to be honest, part of me even feels like I need to do a deal on my own first, so they can see that, I know a little bit about what I'm doing. I'm obviously still continuously learning, but
yeah. But if you can't, listen, man, if you can do a deal on your own, do it. Right.
Okay.
If you got the capital, you said you're selling a piece of real estate.
Correct.
And then you're going to take capital out of that and roll it up into the next deal.
Pretty much. Yeah. I'm going to basically use that to be able to buy the next deal that I want to get.
Okay. So you're selling it, you're going to make a chunk of change, and you're going to parlay that up. Right. Okay.
Correct.
All right. Do real estate. I recommend that you do real estate deals with your own money, no private equity, for as long as you can. The reason why I'm saying it, again, this is from the guy that wrote the frickin' book, Raising Private Capital, right? And I'm just saying that you're going to get diluted. So if you got to go give away 20, 30% of the pie, or 50% or whatever, to a private investor, I get it. They do that because they're taking a risk alongside you, all that stuff, all that happy stuff. But you're still going to get diluted, And if you've got, if you're asking somebody to put up 30 grand and you got 30 grand that you are going to put it up and you got no plans for it, and all your living expenses are covered and everything like that, use your 30 grand, because that's just more ownership you give yourself. And you will get to a point where private money is going to make sense. So you got two choices: use your money on that deal and get that deal going, and then do another deal, do 2 deals at once. And so you could just double your efforts and just double your pipeline, right? Double your marketing, whatever. Try and do a couple of deals, because you said you want to do it full time, right?
Correct.
If you want to do this thing full time, you got to have a few irons in the fire, a few deals in the pipeline to feed you, right? So maybe do one deal just on your own and do a couple of deals with investors in that. But you got to be a little stingy with the equity, because that's all profit and proceeds and cash flow and upside and refinance proceeds and sales proceeds and all that. That's all yours if it's just your deal. You follow?
Correct.
Cool. Yeah, Justin, come on in, Justin. We want to make sure you got some insight here. What do you think on for Jonathan's situation? And John, I want to talk you out of working with private investors, but delay it if you can. What do you think, Justin?
I think it really depends on your situation. What kind of deal can you do now, and what kind of deal are you looking for with your investors? Does the deal type change? and what does the return look like for you, right? If you can actually model out different numbers and put those numbers on paper, then you'll have a better idea of, how much do you have to give up? How much equity do you have to give up to these investors, or can you just do debt? And are they interested in debt? And I think you mentioned you're going to BRRRR, right? So if you're
my initial thought process would be to BRRRR, and if the BRRRR doesn't work out, usually BRRRRs are also good flips. So if I can't BRRRR it, then I would end up selling it.
Yep.
Right. So let's say the return's not as high for your investor, or on an equity split. Maybe they're okay just doing debt, and so you can come in with a higher rate that's maybe closer to hard money rates. But if you're only planning to use it, like you would hard money for a flip or something, and you're planning to refinance out, then you might be able to still build that relationship with that partner and that investor, get them a good return, but not have them locked in with that expensive debt long term.
Mm-hmm.
Okay.
And when it comes, but I will answer your question. So that's all good advice. And then when it comes down to start breaking down investors, because I get you said your question was not should I bring in investors. Your question was how should I carve it up with them, right? And so at some point you're going to have to bring in investors, and you've got some people that have significant capital. Are these folks able to produce at least a $50,000 check, or are they?
Yes.
Okay, good. And this is the folks listening too. I don't like working with people that where the check they're able to bring to the table is not huge. And it's not that they're not worth my time. It's just that assembling a lot of investors that are putting in 10 grand a piece for now, and until we get online portals and things like that make investing a really, really super simple at a couple of grand a clip. It's not going to move your needle enough. And you're going to have to go and raise a lot of individual investors to make a deal work. And so it just makes more sense to go and raise one investor, 50 grand, 75 grand, whatever. Here it is. Put it in my deal, get the deal humming, get them a great return, give their money back, rinse and repeat, right? So that's number one. Now, with regards to equity splits, it really, Adrian or Jonathan has to go back down to what kind of return they're going to get. For higher risk stuff, like we've given investors cuts on new construction properties for sale. It's high risk. So we targeted giving that investor a mid-20s% return, and we got it. We outperformed our return goal. For stabilized rentals where they've got some collateral in the beginning, a lien on the property, whatever, low to mid-teens is probably very generous. And so I would go off of what the ROI that they're going to get is, not like immediately, I'll just do 50-50 split, or I'll give you 70%, 60%, whatever. And I also, one last thing. So those are the return structures I would do. You got to turn it around and go off the returns that they're going to get on the money. Now, last thing, I said this in my book. You got to go off investors that see you as equal value as they are. And when investors start looking at what you're doing and they're like, well, I can make just as much on the stock market, or even worse, why would I partner with you when I could just buy that property myself? That's the worst. When investors say that, man, out, gone, I'm going to go find the next person. Yeah, you shouldn't, because they don't see your value, and they don't see what you're producing. And if they're comparing you to the stock market or whatever, you either got to educate them and say, hey, listen, you think the stock market's good, but let me teach you about something called depreciation and how I can pass through losses on a rental where the stock market's not doing that. No, by the way, yeah, you could go buy Microsoft right now, but what if Microsoft goes to zero? Can you come take the CEO's house? Right? Do you have any collateral on your Microsoft stock? No, you don't. Teach them about collateral, depreciation. Real estate offers way more investment benefits than just percent of return on investment. I would try and educate and also not be afraid to tell an investor no if they start looking at what you're doing and saying that they could be doing it better, or the returns aren't as good as they think they should be and stuff like that. Nope. They don't see your value.
Not every deal is right for every type of investor, and that's okay.
Yeah.
And there's actually a lot of power. As soon as you say, no, you know what, this is probably not a great fit for you, you're going to see the power shift, and it's going to be back to the court. Yeah. And all of a sudden you're going to feel really like you're going to sit up. You're like, oh yeah, I just told this guy no. I just rejected $100,000. And you're like, oh man, but there's power in that, because then you can tell the next guy, yeah, no, you know what? Not everyone is a good fit. And I've turned down money before because it changes, the view from he's desperate, he needs my money, to I have something of value that I'm bringing to the table that's actually more valuable, because there's a lot of money out there and there's not as many deals. And we've been in that position for a while. So if you've got a deal and an opportunity and a way for someone to come in either on the debt or the equity side and reap all those benefits of owning real estate, there's not that many great deals out there. So you are in the power position. No,
absolutely. And the fact of the matter is, if they were talking to you, they're interested. So those are to sum it up there for you, Jonathan. Don't work with them until you need them. Look at their returns that they're going to get based on, look at the returns they're going to get to determine the splits, and what split do I need to give them the return that that they want to see. Right. That's number 2. And number 3, as Justin and I have said here, you want to, I forget number 3, Justin, help me.
Don't be afraid to turn them down if I have to.
Yeah, there you go. Don't be afraid to say no. Thank you.
Jonathan's listening. I'm glad he's listening.
Okay, I know. He probably took notes and everything. Glad you're a good listener. Yeah. So, Jonathan, thank you. We'll see you active on Insiders, man. Come check in over there. Make sure you give a shout out live on Insiders, shout out on Insiders, and do a introduction to yourself. Lots of great people on that community that are dying to meet you, I'm sure. So that's what we got, guys. Justin, great program. Private equity, I think to me, like the bottom line is private equity is super powerful. It's just about using it at the right time and not before that. So when is it time to start bringing private money into your business is perhaps a good synopsis of the whole thing, right?
Absolutely. Cool. Well, if you guys have questions, help me at DeRosaGroup.com. Please send that email and come join us on Insiders. We want to hang out, and I think get a lot of value out of there.
Cool.
All right.
Thanks for watching, guys. Do it with me, Justin. Have a great and profitable week.